Hello there. I'm Max Keiser, and this is the Keiser Report. You know, you've got to beware of Greek prime ministers bearing false referendums. Stacy.
Yes, well, we all know it was just, a week, maybe 2 weeks ago, when there was that referendum in Greece, and everybody voted overwhelmingly against austerity, against privatizations, all the things that were happening. They voted Oxy, as we pronounce it, and we can pronounce it because we're imperial residents.
I don't get it. Why did they have that referendum? What was the point?
Exactly. Here's the headline.
I don't get it.
From this weekend.
I don't get it. What was the point?
Well, check this headline out. Greece does about face, pledges big privatization push. So they in particular look
about face, it means Janus face. I believe it was invented down there in Greece. Janus face, two-faced, duplicitous, liar, pants on fire.
Yes, that's the technical term for it. Liar, liar, pants on fire. So there was a €7 billion waterfront development, for example, and that was put on hold once Tsipras and Syriza were elected. And now, however, they say, now in an attempt to get a third European bailout and prevent the Greek economy from collapsing, the ruling party has done an about face. It has pledged to fast-track the waterfront project, plus sell government assets and allow for private developments of state-owned property, all to generate cash that will help reduce Greece's €320 billion national debt and pay back money lent by European nations to prop up ailing banks. The ailing banks, by the way, were the German banks and the French banks, not just the Greek banks.
If I lend the Queen of England $20 billion, and I lent her $20 billion, and it's backed by nothing. It's collateralized by nothing. It's just a piece of paper. It says, I'm lending you $20 billion. Then the next week, I call her up and I say, hey, Queen Elizabeth, pay me back the money I lent you. She's like, no, I'm not going to pay you back this money. This is a fraudulently induced loan. You know, you don't have any collateral to begin with. You're illegitimate. You're coming from nowhere. You're unvoted. You're some kind of frickin' troika. And then I hold a referendum, and then I say, you know what? I'm just going to take Buckingham Palace anyway. I'm going to take the crown jewels anyway, right? So here you have this troika, this IMF, ECB. They write Greece this loan, which is backed by nothing, collateralized by nothing. It's a piece of paper. It's completely non-existent. It's nonsensical. The Greek people said, wait a minute, this is stupid. We're not going to just give you our assets for giving us this piece of paper.
Well, it's a two-faced loan, let's say that. It's a two-faced loan. It's a two-sided loan, of course. There's a creditor and there's a debtor.
But the creditor is a known, exactly. Scoundrel.
But most people online, the sort of people that write in the comment section of YouTube, for example, will say that there is no such thing as a responsibility by the creditor, that creditors are supreme, they are divine, they are appointed by God, and they are they're infallible, and you cannot betray them.
Yeah, I know. Okay, for those creditors, for those commenters on the site, I will be happy to write you a check right now for $10 million. Okay. I'll write you a check. Anyone. I'll write anyone who's watching this show a check for $10 million as a loan.
Okay.
If you can't pay me back the next day, I want you to give me all your assets.
Let's look at this.
Oh, wow, I'm Christy Lagarde. I'm a financial genius.
Well, let's look at this situation in Greece, for example. And they're privatizing this marina, which, by the way, was built by the taxpayer of Greece for the Olympics, and then was never used again. It's sitting there unused, and now these various people want to buy it, Chinese and Arab investors, in fact. And the Greek government is willing to send it to them. They're going to get €950 million for a 99-year lease. And then they're saying in the article that the privatizations have met with varying degrees of resistance, with some arguing that stressed governments such as Greece's are selling assets at below market value. Opponents also say privatization reduces job security and transfers wealth to a rich elite.
So they say that they are going to bail them out for another $80 billion or so, but the asset sales are going to generate $500 billion in these are real assets.
No, well, they're going to generate that much for the people who buy them, but they're like in Spain, we saw this past weekend that China bought a €1 billion airport for $10,000. So, you know, these are the sort of, this is how wealth transfers
Right, they're buying these assets for a penny on the dollar,
yeah.
And then they're going to re-securitize them and resell them based on this idea that they loaned the money uncollateralized, just a piece of paper that said billions of dollars on it, and they decided they had a referendum. We're not going to pay this because we don't even recognize you as a legitimate lender.
By the way, they have this hundreds of billions of euros of debt, and they're saying, oh, you have to
Who
sell
has
off
the
your
debt?
Well, whoever the government the taxpayer
What
allegedly
government?
owes it. But it doesn't matter because they're only going to raise like a fraction of it, and then they'll say, okay, then they'll default. Then they'll be allowed to default once they sell off the Acropolis, the marinas, the oil and gas.
They're going
rights.
to default anyway.
Yeah.
They're going to be kicked
but
out of the euro
but
anyway.
only after somebody else has an infallible contract.
Right, after
for
they
those
steal
rights.
all the assets.
So here is a headline as well regarding this billionaire Warren Buffett buys Greek island. And this is the Greek island of Agios Thomas for 15 million euros. Here he is, laughing, smiling, looking very happy.
This is a typical Warren Buffett play. You know, you're buying, as he says, you know, you're buying straw hats in the wintertime. You know, while we were in Greece when Steve Forbes was there during the riots, like 3 years ago, with the International Chamber of Commerce having a conference on how to destroy Greece and sell assets for pennies on the dollar to people like Warren Buffett.
But that's like, again, 15 million euros against 300 and something billion euros. It's a tiny drop. It's not going to do anything. It's not going to stem the tide of liquidity and cash and asset values and everything leaking out of the country. There's another headline that says Johnny Depp buys Greek island for 4.2 million euros. The Hollywood star purchased the island of Stroglio, a small outcrop of land just 0.2 kilometers in area with the help of London-based Proto organization. The property consulting company had also recently advised Angelina Jolie and Brad Pitt to buy the small Ionian island of Gaia Sogia.
What about Lesbos? Is Lesbos an island? I'm always
that
interested.
could be for
From
sale.
Greek mythology?
Also, speaking of two-faced and liar, liar, pants on fire, part of the reason why Greece is in this debacle is, of course, Goldman Sachs, who helped them get those, who get their way into the European Monetary Union. And the headline reads, Blankfein joins the Billionaire Bankers Club. Here's Lloyd Blankfein laughing, laughing, laughing.
Right, okay.
So, we're in a day and age of all the laughing billionaires.
Right, okay. Lloyd Blankfein or Jamie Dimon, first of all,
Jamie Dimon became a billionaire as well.
Yeah, they just become billionaires. This is after a lot of 2,000 or 3,000 other billionaires have already been created. So finally, struggling over the finish line before this whole thing blows up is a Lloyd Blankfein and a Jamie Dimon. They're basically in the concierge business. It's like, imagine your dry cleaner was stealing change from the pockets of all the suits that they were dry cleaning for 20 or 30 years and amassed $1 billion. I mean, this is the job that Lloyd Blankfein does. He's just a concierge. He's a dry cleaner. He launders money for folks. He takes a few stipends, a few shekels along the way. Now he's got $1 billion. I mean, this is an extraordinary development in modern finance where, a guy who cleans your floor and launders money for HSBC and Mexican drug cartels is $1 billion.
Well, we should think of him as a head of a utility or a civil servant, somebody who's doing a government job, a bureaucrat. You wouldn't want them to be billionaires.
Should be, right.
But what has happened, of course, is just like with the privatizations in Greece, shifting wealth, transferring wealth from the impoverished Greek people to the billionaire class. Well, how this happened is via quantitative easing, because if you look at it, the chief executive officer of the Wall Street bank Goldman Sachs for the past 9 years, Blankfein has seen his net worth surge to about $1.1 billion as the firm's shares quadrupled since the initial public offering, according to Bloomberg Billionaires Index. As the largest individual owner of Goldman Sachs stock, he has a stake in the company worth almost $500 million. But real estate investments and an investment portfolio seeded by cash bonuses and distributions from the bank's private equity funds adds another $600 million to his bonus. So all these assets, the stock price, the property portfolio, and the private equity are as part of the system that we see in like extreme in Technicolor from Greece. But this is the quantitative easing driving up the price of assets everywhere except for where they want to pluck. So, of course, they're not driving up the asset prices in Greece. The Acropolis you could probably buy for £100,000, but it's probably worth hundreds of billions of pounds.
Hey, mazel tov, Lloyd. You cooked the books and got Greece into the euro. You made a lot of money that way. During the 2008 financial crisis, you were bailed out and converted yourself into a bank from an investment bank and basically stole billions from the American people. You converted to a privately listed company on the stock exchange from being a partnership to take all the risk of doing business and put it into the public domain. So this freaking is now a billionaire. Congratulations, Lloyd. You ripped everybody off for billions of dollars, and now you can go down to the country club and sit on your yacht and pretend as if you're not a frickin', dry cleaning, money laundering scum.
But also, what happened with Greece and all the private equity and across Europe and everywhere you see is also paying off, bribing very small amounts, relatively small amounts, to often unelected, but elected officials as well. And what we see with Goldman Sachs, as they say, is shares in the firm have climbed 298% since the IPO in 1999, compared with a 6% drop in the Standard & Poor's 500 financial index. So they've outperformed the other financial sector because they have access to, like Warren Buffett, by the way, bailed out Goldman Sachs during the financial crisis.
That was another fraudulent deal at a 10% loan for 6 or 7 years. They pay back the loan, unavailable to anybody who actually in the public domain who bailed out Goldman Sachs. All that cash went to Warren Buffett.
Well, the free money.
Saying, there's deflation. Let's keep the interest rates at zero. It's like billions in this country. In the UK, they've taken 350 billion pounds from savers, from grannies, from retirees, from pensions, and put it into frickin' these guys' pockets. Why? Because the government is corrupt.
Zero Hedge says regarding this article about Lloyd Blankfein, the CEO of Goldman Sachs, now being a billionaire, he said, and frankly, that's pretty much all you need to know, that their company is outperforming other shares. And he says the Bloomberg article has more on Blankfein's homes, background, and charity work, but the bottom line is that it pays literally to have friends and former colleagues in high government and regulatory places. And if you're still having trouble understanding how it is possible that the same people who plaxicoded themselves in 2008 and plunged the world into the worst recession since 1930 could possibly be allowed to not only remain out of jail, but accumulate obscene fortunes on the back of the humble taxpayer, well, that's why Lloyd Blankfein is richer than you. So Plaxicode is that, by the way, I had to look that up. That's that football player who shot himself accidentally in the leg in New York City. And of course, it's against the law in New York City to have a gun. So he ended up going to 2 years in prison for that. Greece
was, as I've been saying from the beginning, the subject of a leveraged buyout. It was a country. This is the first time we've seen a leveraged buyout of a country. It was only worth about $300 billion before this.
And that's what private equity does, right? Leveraged buyout. That's what Lloyd Blankfein,
that's what Blankfein and Buffett and these guys, they organize a leveraged buyout of a country. Now they're selling the assets to pay off the debt, the islands, all the income-producing assets, and they'll get, $500 billion for those assets. And the Greek people will get nothing. They'll be put on reservations like the Sioux or the Iroquois, starved to death, or imprisoned, or vilified, or scapegoated, and murdered by murderers.
Well,
Murder Inc.
Speaking of billionaires, by the way, speaking of billions, Greece did transfer 6.8 billion euros to the IMF, the Troika. So that came, they were given some more bailout funds, went to Greece, and it went back straight to the Troika. So this is how the billionaire class is created and sustained.
Well, bottom line is Greek people are they
two-faced.
Yeah, they're two-faced.
They got two-faced.
They got badly. All right, well, thank you.
That's my two faces.
Stay tuned for the second half. A whole lot more. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to Eddy Travia. He's the CEO of Coinsilium Group, which will soon go public on AIM here in London. Eddy, welcome to the Keiser Report.
Thank you for having me.
Okay, first of all, tell us a little bit about Coinsilium. What is the company? It's obviously Bitcoin blockchain related. Tell us about it.
Yes, it's a blockchain and fintech company, and we are providing services to blockchain and companies, and we're also investing in some companies, all related to blockchain.
So you're investing in companies and you're providing services to companies.
Yes.
So as you're investing in companies, so you've got a portfolio of companies that you're investing in, and what are the services that you're providing to companies?
So we're providing business, corporate advisory, regulatory advice, media and communication, brand positioning. So we're basically helping these companies to develop and provide a commercial viable solution on the market. Okay, so this is interesting. I believe this is the first real initial public offering of a blockchain Bitcoin-related company. Yes. We've seen other Bitcoin investment trusts and other items like our own Bitcoin Capital are entities that are trading in various markets, but this is now the first IPO, initial public offering, and it's come quite a ways, the whole industry, from just a year ago. We had the Silk Road scandal, the Mt. Gox scandal. People still have in their mind that this sector is mired in some difficulties, and yet Coinsilium
is showing that there's a huge growth, there's huge business, there's a lot of VC money, and you're doing an IPO. And am I correct to say that people are maybe don't have the right impression about how the growth of this sector is and where it's going?
Yeah, there's still some education to do, so that's part of the process. When we talk to investors, we don't have really that image or that impression that they're still in this kind of very, I would say, incidents of the Bitcoin path. We're really talking more about the potential of blockchain technology, how it can help really very large organizations, organizations dealing with complex data and complex networks work. I also want to point out that we are not a fund. We are not only, investment is part of our services. We're really providing a range of services, and investment is only part of it. We're also not linked to the Bitcoin price, for example, which may be more sensitive to these kind of incidents, like you mentioned. So we are really more into the underlying technology, blockchain itself.
Okay, so if I look at a company in New York that's on the New York Exchange, like BlackRock, for example, they do investing in the industry. They do advisory. They create products. They're also a private equity group. So there might be some. Why AIM? Why the alternative investment market here in London? Why London and not Hong Kong or New York?
Well, AIM is a very successful growth market. We are still early stage. I started a Sitcoin initially. We could call it the predecessor of Coinsilium back in 2013, summer 2013. And with our partners here in the UK, we created Coinsilium a little bit more than a year ago. So it's still a young industry. It's still an early stage company in a sense. So we were looking for a market which is really compatible with this kind of industries and this kind of stage of company.
Now, there are countries around the world that are vying to be the home of crypto development, cryptocurrency development, and Singapore wants to get involved. New York has their bit licensing program, which was roundly rejected by the industry. Now they're losing business. The London seems to be open to crypto business. They are, for example, I believe, are no longer charging VAT, the value-added tax on these transactions. And George Osborne, the chancellor, and the Tech City environment, or Silicon Roundabout, as it's called, seems as though they're really trying to position themselves as a global hub for crypto. Is that a true statement?
Yes. The time we have spent here, since 2013, my partner and CTO of the company has been based in London. He worked in London for a long time in the banking on the IT side, and he has really witnessed that interest from and that openness about cryptocurrency from British institutions, like you were saying, George Osborne. The government in general seems quite open and positive. We talked to the Bank of England. We talked to the Parliament, Westminster. I mean, we talked to different actors, official actors here in London. And they have a consultative, they have a progressive approach, which means we feel we can talk, we feel they want to involve members of the community in the discussion. So that's very important. That's another key element that has drawn us to actually list in London.
What about this split that's developing within the industry? Since the introduction of Bitcoin back in the 2009 period, we have seen now the development of other currencies, let's say a Ripple, for example, which unlike Bitcoin does not have a hash rate. It's not distributed in that manner that Bitcoin is. It doesn't have the same kind of features. And this seems to be attracting industry players like big banks, for example, who want to get into the game of a blockchain technology where they can shuffle funds amongst each other for an enormous cost savings for themselves. And the history of these banks is not to pass that cost savings on to the customer. It's to keep all the money inside and pay themselves huge bonuses. So there's this enormous appeal of blockchain by using these kind of a watered-down version, these pure blockchain non-hash rate coins. And at the same time, you've got Bitcoin, which is becoming global, and it has an appeal for political situations like in Greece. The people in Greece, for example, who are having their wealth confiscated, they would normally want to preserve their wealth by going into Bitcoin. Is there is this split in the industry? Is this something Coinsilium is aware of? Does Coinsilium try to play both sides of the market, more as a neutral player, how do you see that conflict progressing? Is there going to be a battle royale between, let's say, the Blythe Masters of the world, who are from the dark side, who are from Wall Street, the underbelly of the financial jihadis, versus the pure, angelic, beautiful Bitcoin?
As part of the community myself, I've been following the progress of consensus ledgers, ledgers which may not require proof of work, which can be, for example, private, a little bit like Hyperledger, for example. This kind of non-pure Bitcoin, as you were saying, or different kinds of blockchain. Yes, at Coinsilium we are blockchain agnostic. We want to work with all kinds of blockchains, I think, and at the same time we have also been investing, for example, in companies that are really building tools for all types of blockchain, or at least several types of blockchains. So we're going to have this position of both innovator, and our ambition is to be a market leader in the blockchain technology space. So open to all technologies in that space. Yeah.
Yeah, I mean, I think anyone, however they view this debate, would welcome the Coinsilium IPO, because it's definitely moving everything forward. And this industry is very new, and you definitely need momentum going forward. But there is this kind of friction developing internally, which is, I mean, that's the nature of competition. So we'll just have to see how that goes going forward. Now, Coinsilium is, just to talk about the deal itself. So it's going to be listed on AIM. And do you have any, so you're doing a roadshow, right? Mm-hmm. So you're going out and you're showing this to investors. And this is going to be primarily institutional investors. What's been the interest so far in the deal?
Yes, right now it's primarily institutional investors, tech VCs who are used to invest in new early stage tech startups, for example. And investors who are really familiar, let's say, with the AIM model and the type of companies listing on AIM. Prior to this roadshow, we have done, let's say, pre-IPO fundraising to finance the cost of the IPO, to finance some of the investments that we have made. And this has been done mainly with private investors who understand the potential of blockchain technology. But now, yes, we have to pitch more to institutional investors, and it's going well. I think people start to understand the difference between Bitcoin, blockchain, and we see a lot of interest in the market. Right.
So to be clear, this is the Coinsilium is. It's an industry play. It's not a proxy for the coin itself.
No,
those are available. There's one in New York, I believe. The Winklevoss twins.
Yes,
are
ETFs.
Doing, they're doing.
We're not an ETF.
Right. It's exactly. Like an ETF type thing. So this is more of a play. And so the size of the deal, you don't know really what the size of the deal is going to be yet, right? That's still being worked out by bankers, or do you have a rough idea what you're going to be looking for to raise?
To raise at minimum £3 million.
Right, and in the alternative investment market here in the UK, that's about the size deal that they normally do. That's kind of within the range of what the kind of the deals that they do.
For the first listing, yes.
So and then, so what is your thought going forward? Let's say in the next 2 to 3 to 5 years, how do you see this industry developing?
Well, what we have seen, for example, till now is that we've moved from the infrastructure of digital currencies. So initially, when we started looking at the space, we were looking at payment processors, exchanges, wallets. And now we're seeing, let's say, more diversified plays. We're seeing people going into other directions, not only finance, not only fintech and trading systems, for example. We're looking at rights management. We're looking at auditing. We're looking at other aspects of that can be done with blockchain.
The consensus ledger.
Yes.
Essentially, the blockchain.
Yes.
Which any industry that has multiple parties all interacting simultaneously, here's a way to cut out 99% of the cost and develop this open global ledger that's aggregating consensus. And this can be applied to insurance industry, property industry, the many.
Yeah, land registry, like Factum is doing, for example.
Factum.
Yeah.
I mean, so all of those intermediary plays, all those companies that are in the business of pushing paper, that like the insurance industry, I mean, they're going to have to face a moment of truth, I would think.
Yeah, all the industries or all the sectors where there is a complex, let's say, network of either payments or audit trail or systems whereby you have to follow track of ownership or follow track. So it can be very large transactions like real estate, or it can be tiny transactions like the music industry, like downloading a video on the internet. For example, the monetization of the internet is a great, still, let's say, gray area where there are a lot of improvements that can be made. And definitely the current payment systems, current payment methods are not necessarily the best adapted to the internet.
All right, Eddy Travia, we're going to have to cut it off there, CEO of Coinsilium. Thanks so much for being on the Keiser Report.
Thank you very much.
That's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I'd like to thank our guest, Eddy Travia, CEO of Coinsilium Group. If you'd like to get in touch, tweet us at Keiser Report. Until next time, bye, y'all.